First show of FX Today. I'm your host, Steve Edge. Well, it was quite a week, wasn't it? The sell-off in equities that began the week before accelerated last Monday. This continued the flight from the US dollar in all currency pairs. Media outlets reported China contagion as the culprit. The Central Bank of China cut rates a fifth time since November, trying to add liquidity to a panic-stricken market. The slowdown in China is believed that it will affect the US economy and cause the exit from the greenback. But later in the week, though, the market appears to have shaken it off, making a decent recovery and restoring some confidence to the dollar. Well, let's see what happened last week.
Looking at the long-term Euro USD, this 100 pip by 3-point figure chart from July 2008 shows the Euro's ride and its recent low of 104.62 from March 13 of this year. We can see resistance begins at the 120 range. We do think it will bounce off here though. Primarily traders will want profits, and of course the long-awaited US Federal Reserve tightening we keep hearing about will increase the interest rate differential between the euro and the US dollar and should send the euro back lower if and when Miss Yellen finally pulls the trigger. So where's the Euro USD going? Well, a closer look at the same chart from May 8th isn't exactly clear. Is that an up wedge on the left-hand side that will send the euro lower, or is that a bottom with a breakout to this week's high of 117 we saw on Monday? The euro did close the week at 111.82, which is a nice pullback, but we aren't sure if they will go higher to break the wedge or bounce off the base of just been building since March. Moving to the cable, it didn't rally as much as its euro and yen counterparts, seeing a gain of more than 100 pips during the climax on Monday, but ending the week 300 pips lower overall. A closer look at the sterling chart clearly shows a rounded top, and the sell-off we saw at the end of the week has broken that up wedge, all pointing down for the cable.
This next chart is the euro-sterling pair.
It's a 25 pip by 3 from September 10th, 2014. We can clearly see a rounded bottom that has formed and the start of a down wedge into that bottom at the 74 to 73 range. We think it will do a bit more work on that wedge, probably pulling back to 72. We like buying the dips for this pair and don't see 78 as an unreasonable target. Turning to the yen-US dollar, this pair was the biggest mover during the Monday panic, moving 300 pips in 30 minutes. Boy, those shorts got squeezed. Our 100 by 3 pip point and figure chart from June 2007 shows the US dollar's breakout versus the yen from its 125 high, and then the pullback to 116.10 it achieved this week, breaking that up wedge. The yen continued to recover for the rest of the week, ending almost unchanged from Monday. The question is, will the US dollar keep rallying versus the yen? Well, Monday's shakeout would seem to support that. However, the recent breakout to 125 from its 7-year high would suggest that it needs to pull back further. But was that the pullback we saw on Monday? Again, there is the US raising rates in the near term, and Japan won't be raising rates anytime soon, supporting a stronger greenback. It's too hard to call this one at the moment.
Before we look at our last currency pair, here's what's in store in the next week's economic calendar. The last pair we'll look at this week is the sterling yen.
This chart is the 100 pip by 3 from May 12, 2014, showing the recent high of 195.88 on June the 24th. We can see Monday's dramatic pullback to 184 and what looks like a solid base to go higher, but will it really? Turning to our 25 pip by 3, we can see a different story, however. This chart from June 24 shows an up wedge into the recent high of 195.88, breaking down to Monday's low. Later in the week, we see that its rally failed on Tuesday. We think this pair will continue lower, perhaps testing its low of 174.88 on April 14th.
Well, that's our show for this week. Be sure to like and subscribe to our channel, and we would like to see your comments below too. If you have any questions or would like to see us cover a certain currency pair, please contact us as well. For FX Today, I'm Steve Edge.